Good afternoon, traders. It's Bill Baruch with Blue Line Futures. And it's your daily midday market minute. The word of the day is skip. But before I get to it, if you're watching this on YouTube, please click the link below and subscribe. Like and subscribe if you're watching from our website. There's also a link below to direct you to YouTube, and you can subscribe that way. We'd love for you to follow us. We'd love you to help us build our following. All right, let's get to it here. Yeah, the word of the day is skip, because the question is, will the Fed skip a hike at the next meeting? And we've heard from two Fed speakers today. You have Philadelphia Fed President Harker, as well as the Fed Governor Collins, who did speak. And Collins is up for that vice chair role, and the markets moved after this. We saw the S&P really separate itself from major three-star support. Yes, you heard it. Major three-star support held here today, with the S&P down basically 40 points, down 1%. That was our level. That was our only major three-star support, the first level there. So we saw the market respond. The NASDAQ as well has come off the low and paired some of these losses, but we're nowhere near turning positive here right now. However, there is going to be significant resistance aligning with unchanged on the session, because the S&P opened up in the red and did not get a chance to cover that 42.15 settlement from yesterday. All these levels are highlighted on the Morning Express. Same thing with the NASDAQ. Those levels are there, but it did cover yesterday's settlement, traded above 14,400 before trading lower. And, it's been a little bit of a, just some of the air coming out of the AI trade, or the tech trade, if you will. We do have some earnings after the bell from C3 AI. Their symbol is AI. If there were a reason to see some, another leg higher, which could lead to that inevitable blow off top in the near term. Now, I don't think it's going to be a rollover move, but a little bit of a blow off top in the near term would be quintessential to see it really coming from this symbol AI. You also have CRM and CrowdStrike after the bell too, so a lot to digest here. After the bell, and as we move into tomorrow, because not only these earnings. We had data today, starting with last night. You had Chinese manufacturing missed. You had slower inflation coming out of the Eurozone before JOLTs job openings came in higher than expected, rebounded back above 10 million. Now, the Fed watches this number very closely, and that's what really opened the door for added pressure. The tape was really soft after digesting the start of the week, and then you had the Chinese data last night, the dollar working higher, and then overall that JOLTs number coming in higher than expected, which sort of becomes a tailwind to Fed rate hike expectations, which have been receded here today. So again, it was weakness early that came in from all of those overnight moves and the JOLTs, and then we've had these comments here as the day unfolded that the Fed could skip a meeting in order to assess inflation, give it time to really what their work has done to really marinate through the system. I think that would be smart at this point. After those comments, we've seen the expectations for a rate hike in 2 weeks from now go down to under 30%. They were above 60% earlier today, and this leads into the vote at the House. Congress will vote tonight on the debt ceiling deal. So, we expect some volatility. You have today's moves, but volatility should carry over tonight as that vote is on the table. And then that leads into ISM manufacturing tomorrow. So a big week ahead, because it finishes off with non-farm payroll. So we're really just getting going. Wednesday, Thursday, Friday, a lot coming at you. With crude oil, it's also seen a lot of pressure here from that Chinese manufacturing number last night. Obviously, the global growth fears were there, and then sort of just some selling, buy the rumors, sell the news that came out of that OPEC comments. Obviously, there's comments from Saudi energy minister could have been twisted a little bit, talking about those algaes. You remember that? Now, it was more about talking in the past rather than talking in the future. However, what we highlighted on the Morning Express today was there's the OPEC hike, or OPEC production expectations. Now we're calling for a 50-50 probability that they could bring production back on or unchanged. And really that becomes just it becomes a tool that was created from option volatility, and when you have a sharp move lower like we did yesterday, those put premiums will start to pick up, and that could start to distort those probabilities, and that really brings value. And I think that's one of the reasons why you may see crude rebound. We also made your 3-star support just below $67 to about $67.15. So we've seen the market respond to that. People probably taking advantage of maybe selling some put premium out there. So there's just some interesting things going on with the landscape. But obviously, last night's China manufacturing has weighed on crude oil. It also has weighed on other commodities like copper. Copper nosedived earlier. It has responded actually after settlement. It was the news that from Harker and Collins, and we've seen copper sort of rebound with the equity markets near unchanged. Actually, I think went unchanged on the session very briefly. Gold and silver are having a day, decent day. I mean, we're starting to shake some of that just precipitous selling away. Gold had that nice bottom, new low yesterday, traded higher into to about, what was it, settle 1976 or so. We're trading as high as 1993, but we're off that mark right now, consolidating very well, I think. There's going to be a lot of resistance as we move into 2000 and 2005. Silver as well has had a nice day, up 43 cents. Getting off that floor. Obviously some good resistance overhead. There's a lot of damage to repair across the board here in the metals, and all those levels are highlighted on the Morning Express. Again, a lot of data here still to go this week. It's going to be a volatile one, but our team is here to help, so don't hesitate to reach out. 312-278-0500. Remember, futures trading involves substantial risk of loss. It is not suitable for all investors.